Good evening.
Hey, good
Hey,
evening.
good to see the familiar faces again. Thanks for joining us. For the new people, feel free to, or anybody, feel free to utilize the chat. Tell us maybe how long you've been trading for, if at all. You can put zero if you haven't traded. Zero time if you haven't traded before and you're kind of new to trading and exploring. And also would love to hear where you're calling in from. So feel free to tell us where you're calling in from, what part of the country. We had a gentleman here from calling in from China. I think it was last week or the week before, so it's pretty cool. So again, don't be shy. Feel free to utilize the chat space. Tell us a little bit about yourself, maybe just one or two, just a quick sentence. Doesn't have to be anything crazy. But we'll give everybody just a couple of minutes to get connected here for those that are just joining. Make sure they're all connected to audio. If anybody's running a minute or two late before we get started. Hey Sean, welcome in. Georgia, awesome. Awesome. All right. Atlanta, okay. Aaliyah, awesome. Options trading for 3 years. Yep. I've been doing it for about 4 at this point now, so pretty close. Excellent, excellent. I'm in Charlotte, North Carolina, along with Kyler here. So Charlotte area, I should say. Awesome. Hey Scott, welcome in. Thanks for joining us, New Jersey. I'm originally from New York. Moved down south here about 8 or 9 years ago and been here ever since. So Yankee moved south. David, welcome in. Thanks for introducing yourself, David. Yeah, David's here with representing Tradier. They're a trading platform, really great trading platform, and hopefully we'll be able to partner up here in the near future.
Yeah, we start with. Go ahead. Happy to be here.
Yeah. Thanks, David. Bruno, Florida, awesome. Welcome in. And Raphael, Alabama, awesome. Okay, a couple novices. That's great. We're going to be presenting some pretty cool stuff tonight, I think. So I think you'll find this valuable for the novices, for the intermediates, or even for the experts. So I think everything that'll be presented here tonight is relative to everybody. So that's great. Awesome. Well, I'll kick us off. We're 3 minutes in here, so I'll kick us off here just for those of you that are maybe new, that haven't joined our Monday night calls. So first and foremost, we have these calls every Monday for about an hour at 7:30 this time, same time every Monday. And recently I've changed we used to just go over kind of the same thing every week, and recently I've changed that. There's a new topic every week that we focus in on. Last week we talked about indicators in the market. And this week we have our first guest speaker here, which we'll introduce in just a minute. And a lot of other exciting things coming up in the near future, which are on the Meetup Group page or on the event page. I will be changing the Zoom link. Just a heads up to those of you that might have RSVP'd for future events. I need to change the Zoom link. They always used to be the same Zoom link like it is tonight, but keep an eye out for that. I'm going to be changing the Zoom link for the next webinars coming up every Monday following this one. So appreciate everybody taking the time to meet with us tonight. Introduction on my end. My name is Nick Delarme. I am been trading options in the stock market for about 4 years now. I specifically trade SPY and QQQ, pretty much solely those two tickers, those two ETFs in the market. And I would consider myself an intermediate. I still have a lot to learn, but I created this group because trading can be a very lonely journey, right? If you've traded at all, you probably understand very quickly that it's a lonely journey, right? There's not a lot of support out there, or if there is support out there, you are going to spend 15, 20, 25. I joined a 2-day course to learn about a another trading group, and it was $40,000 to join the group, and things like that. So unless you have that kind of money, great, that's excellent. But for me, right, I recognize that I wanted to create a community where we could share education with each other. I could learn from others just like others can learn from me on what I've learned, the mistakes that I've made in the market, and how we can all become better traders and how we can ultimately become profitable in the market, which is an incredibly hard thing to do. Kyler will go over that here in just a minute. But that's why I created this group. I hope you all found value here. And with that said, I'd like to introduce to you all Kyler Stocks. Kyler, I will toss it over to you, and Kyler's going to be presenting on how you can utilize and harness the power of AI to help you become more of a successful trader. So, Kyler, I'll pass it over to you to take it away.
Awesome. Thank you so much, Nick. I truly appreciate being here. Nick's built something really, really cool. I've never met somebody who has dived into a passion as deep as he has, and then been able to not only build a group of 500 plus members, but continually show up every single week, not only helping teach, but learning up and down the chain. I mean, I've worked with him now for like 3-4 months, and being able to just see how he constantly strives to learn is inspiring to me. And I'm grateful to be here. A little bit about me. Of course, my name's Kyler. I reside in Charlotte, North Carolina as well. What I do is I basically work with AI in order to help people further their side projects, their businesses, basically anything that you can put data into. I help you analyze and be able to use on a daily basis. So if it's okay with you, Nick, I'm going to start sharing my screen.
Yeah, go ahead.
Awesome, awesome. All right, let me know if you guys can all see this.
Yes.
Awesome. Perfect. Well, of course, like I said, my name is Kyler Stocks. I call myself an AI engineer. There's not really a term for what I do. It could be architect, it could be engineer. But what I pride myself on is helping people build ChatGPT, LLM, AI workflows. Right now, biggest thing that I'm working on is helping traders like you analyze and create rules that can help you become a more profitable trader. As we go on, this presentation is going to be either the best presentation on day trading you've ever heard, the worst presentation on day trading you've ever heard, or somewhere in between. But the whole entire thing that we're focusing on today is education. I want to help you guys understand from novice to expert. No, if you've been in the game for 1 week or 20 years, the biggest thing you came to this game for is to make a profit. You're here to maybe just do it as a side gig, as something you're interested in, you want to dabble in it, see what it's about, or maybe this is something you're looking to replace your 9-to-5 job. And the biggest thing I think we're all asking is, how much profit are you leaving on the table? I actually want you to kind of take a second and think. Do you know how much profit you're leaving on the table? I know a lot of people here probably have journals. I know Nick for certain has a daily journal where he analyzes the market, pre-market, post-market. When was the last time that you looked at your past 10 trades, 30 trades? Did you look back and see where you exited and where it went to, up or down? It's something to think about. It's something we're going to be talking about today. My goal today is to show you how to maximize your profit and turn your trading history into an AI trade partner. And this will help you keep you in your best trades and maximize that profit. Today, what I'm going to give you guys, I'm going to give you one rule to keep, one rule to kill, and one checklist to run tomorrow. So if you take notes, pen and paper, love it. I got my notepad and pen here. If you're taking notes on your computer, that's great as well. But we'll save about 10 minutes at the end of this for questions. So if you have a question, you can throw it into the chat. I'm sure Nick will be keeping up with it. Or feel free to just jot it down. We'll save it for the end. I do want to preface, this is educational only. This is not financial or investment advice. Trading does involve substantial risk of loss, and your past performance is not indicative of future results. So I just have to say that. It's just the NFA I have to say. With that being said, I wanted to dive into something that is a stark reality of options and futures trading. I'll be honest with you guys, I've dabbled a little bit. When GameStop was going huge, I hopped in. I got my profit. I got out. I had a buddy who made over $30,000 trading GME. And I went to go research, is it possible to make a living off of options trading, futures trading? And I saw the statistic, and it said that 95% of traders fail. And it got me thinking, it's like, man, if I just learned, when to exit or when to enter, when to exit, the different patterns I need to know, the signals I need to see to be able to make the most money, could I not just continuously make money here? And I started digging a little bit deeper. And what I found was the number one thing that makes you not a profitable trader was emotions. If you get scared, and you see something that jumps up real quick and you don't want it to go down, you immediately sell. Boom, get out of there. Or maybe you have a fear of missing out, so you jump in at something that has hit its peak and then it plummets. Your emotions kind of dictate what you're doing when you're trading. The second reason was your risk rules. Even if you're a novice and you don't understand, the stop losses and the different terminology, everybody has strategies going into trading. You're going to say, okay, today I'm not going to lose more than $100. I'm not going to lose more than $1,000. And if you don't stick to that rule and you go past that rule, then it's going to end up with just inconsistency. And that's something that made traders fail. The third part was no accountability. That's why I love this group so much. Nick has built something like 500 members of people who meet weekly on Mondays. You don't see that anywhere. I used to be in a men's group that held each other accountable when I was back in college, and I was a better person because of it. And when you're around people who are doing the same thing, it's not like you're going into there and saying like, oh, I suck, tell me that I suck. No, everybody there has failed. Everybody in the group has been able to go through those wins and those losses, and you can learn from each other. And when you're isolated, you're bound to fail. You have nobody to prop you up on your wins, nobody to tell you when you're doing something dumb. And these were the three main things that I found of why traders fail. But it's just crazy to me. So I started thinking, okay, if the statistic is 95% of traders fail, what is the number one thing that we can do in order to be part of that 5%? And that's what we're going to talk about today. So a couple terms that we're going to use today. I'll be honest with you guys. I'm not a day trader. I don't do it actively. So I had to research these myself. And Nick, if I say something that's wrong, please correct me. But a few of the terms after working with Nick for about 4 or 5 months that I had to learn just to understand the data was these three here. We're going to talk about R. R is your planned risk per trade. So for example, if you risk $40, then 1R equals 40. If you risk 2R, 80. Pretty simple. I had to learn that. Exit efficiency. So this is basically what you kept, what you sold on a win divided by your best unrealized. So for example, if you sold at $50 and the market went up to $100, your exit efficiency was 50% because you got 50% of that win. It could have gone up, it could have doubled your money. And then max drawdown, or known as DD. This is just your biggest dip from a high. So this is like your last win all the way down to where you hit the bottom and then started going back up. And that's just your max drawdown all the way to the bottom. So these are three different terms that we're going to be using today. But don't feel like you have to memorize this or anything like that. This is just to kind of explain what we're doing today.
Hey Kyler, real quick, I don't mean to
Mhm.
back you up. Can you go back one slide? I wanna reemphasize these three items that you see on the screen here. So as a trader, especially for the newer traders here, you have to master all three of these areas, or you will be part of that 95%. 100% you'll be part of that 95%. You have to control and master your emotions and your psychology, right? You have to have defined rules in place that you never break, no matter what, right? They have to be clear rules, they have to be written down, and they have to be followed like law, right? And then the third is, right, you have to hold yourself accountable to the mistakes that you're making and making sure that you are correcting those mistakes. So some of what Kyler has already kind of discussed so far, and we'll get into this a little bit throughout the presentation here, is as I mentioned earlier, right? Trading is a very lonely journey. It's very difficult to find the right education, the right framework to really understand how am I gonna what do I need to do to become successful, right? I need to have rules. I need to log my trades. I need to control my emotions. Well, that's great from a high level point of view, but I want to understand what are my risk management rules. How am I going? Who's going to hold me accountable if I am not sure what to hold myself accountable for? Right? So, what are those rules? What emotions am I feeling? I want to jot those emotions down so I understand what those emotions are when I'm trading. So, this is the reason why Kyler said, and this is a really, I want you to think about this as well. How many trades for the people that have traded before? How many times have you gone back and reviewed your previous trades, your past 20, 30, 100 trades, whatever it is, past month or a couple months of trades? If you do that, you can start identifying patterns, but it's difficult to do that. So you want to have some kind of a system and a framework in place in order for you to analyze that data to give you, this is where I'm weak, this is where I'm strong, and these are the areas that I need improvement in. So having that kind of framework is incredibly important. Even if you're new as a trader, where do I begin? Where's the education come from? How do I get my education? There's so much crap out there, and I'm sorry to get animated about this, but I learned firsthand there's so much garbage out there on the internet as far as, and I've said this on all of our previous Monday night calls. You see these kids here, these young guys and gals on YouTube and social media and Facebook and Instagram and TikTok, and they're sitting on their Lamborghinis and they're saying, just follow this one indicator in this one rule and you'll be profitable. 99% of the people out there that you see that are creating that kind of content are frauds. I can tell you that firsthand because I've lived it. I've been there. I've almost followed some of those people, and most of them, not all of them, but most of them are frauds. So getting your education from the right place is incredibly important to get you on that path towards profitability. Now, is there one thing that's going to make you profitable all of a sudden overnight? No, absolutely not. You're probably going to lose money when you first start, no matter how good you are. But having a system, like as I said before, and a framework in place in order to help you kind of fast track yourself to get on the right tracks and to stay on the right track, so you're following the right education, you're learning the right things. That will help you um, get you to that path to success a lot quicker and help you prevent you from blowing accounts and losing tens of thousands of dollars. I've lost tens of thousands of dollars. I'm going to tell you that right now. So that's why I've created this group as well. And that's why I bring people like Kyler in, is to prevent you and share the mistakes that I've made to prevent you from making those same mistakes. So everybody here can be profitable. I want to see y'all make millions of dollars, or at least have financial freedom, right? We're going to get there. We're all going to get there. You have to stay committed though, and you really have to
had that discipline in order to become that 5%. So Kyler, I'm sorry to hijack your discussion here,
but I wanted to backtrack here and really set the groundwork as to why this is so important, and this is really this content here is really valuable for you. I can promise you. We're giving this away for free, and I want everybody here to really digest this information. And please feel free to ask questions throughout the discussion. So, Tyler, I'll kick it back to you. I apologize once again for hijacking there for a couple minutes.
No, totally fine, man. I love that you're so passionate about it. Like, honestly, this is exactly why we do this stuff. And you need to know the scary parts about the things that you're doing. In any profession, you need to know the wrong way to do things. And if you can have a person that said, I've lost money here, here's how not to lose money, that's more valuable than anything you could ever get offline. So the main thing that I wanted to focus on today was this phrase here. If exits, not entries, shape your profitability, then a simple rules checklist can transform your trading. If this one belief lands today, everything else tonight will make sense. If the exits, not your entries, shape your profitability, then a simple rules checklist can transform your trading.
Yeah, just a real quick side note on that as well, Kyler. You can go broke as a trader by exiting trades too early. So, meaning if you have a good winning percentage as a trader, okay, but you take profits too early, you can go broke. You can go broke as a trader. You can not be profitable long term as a trader if you don't hold your positions long enough. Okay, so this is something that personally that I'm struggling with recently. That I've obviously gotten a lot of help from Kyler and the system that he's built for me. But you can go broke. You can lose money long term by exiting your trades too early. So it's an important point I want to make about what he means there with this particular statement, and establishing rules in place that you can follow that will prevent you from exiting your trades too early. Go ahead, Kyle.
Yeah. I want to kick it back to the audience now. Quick, just throw it in the chat. I just want to know what frustrates you all the most. I've thrown a couple of the most I've seen online, as in early exits, over trading, stop breaches, wrong time window. But for you guys that have traded, what's frustrated you most about it? Just throw it in the chat. I just want to see what you guys have been through here.
Couple ones already, so it looks like a couple people are joining me in the early exits, and a couple fours, wrong time window. Okay. Looks like one's winning, but we have a close second in four.
Interesting.
It's almost tied.
Well, for everybody, keep throwing it in the chat. Totally fine. We're going to talk about all four of these today. The first one that I want to focus on is the early exits, just like Nick touched on. Exiting trades early is a slow bleed. And the reason why is because you go through a broker and you pay commission fees. So if you are taking into it tiny wins and you're paying fees on top of it, and then you're having one or two major losses throughout the week, you could zero your count or go into a net loss very, very quickly. The small wins, they can't pay for normal losses. And basically what happens is you get a small win, and then you take a huge loss. Small win, huge loss. And you're frustrated because you think you're doing everything right. So you start to get away from the rules that you've set for yourself. And then all of a sudden you're looking at a net loss for the past month and you're like, what am I doing wrong? Nick was super, super kind to be able to share the case study that we've done for the past 3 months. Basically, what we did with Nick, and he's a very humble guy. He's already told you guys that he's lost, thousands of dollars, and he's also made money in this game. He allowed me to share his past 88 trades. It was roughly across the past 3 months. And we're going to dive into what we actually pulled with AI, analyzing the data, and what we enacted so that he can become a more profitable trader. The first thing we're going to talk about today was his exit efficiency. Like we talked about in the very beginning, exit efficiency is when you go into a trade and you sell, how much higher did that trade go? For Nick, over the course of 88 trades, his exit efficiency was 59%, which means he left 41% on the table. 41% of profit didn't capture. We also found that every trade outside of 10 a.m. to 10:30 a.m. was a net loss. His only positive window was between 10 a.m. and 10:30. I know a couple of you in the chat, you were talking about wrong time windows. This was something that was actually astonishing to me. And I know everybody's different. Everybody has different schedules. Everybody has different warm-up routines. Some people crush an energy drink, jump on the computer and just dive in. Some people have very manicured, curated, wake up, workout, coffee, research the market, and then hop in. But we found that his only positive window was between 10 and 10:30. The biggest thing we found was he had stop breaches and oversizing, which led to fat tail down days. Basically, when you set up your rules and you have a stop loss or something that would automatically sell, there were times where there was a few trades out there that we had gone past those, or we hadn't stopped it when we said we were going to, and then we just had a trade that somehow got away from us. And like we said in the very beginning, you had an incremental win, and then you have a big loss, and it just ruins your profit for that week. So we saw a couple of those. What we really dived into was a myth that inside of the trades, that more trades equaled more profit. We found that was actually false. The ugly truth is fat tail days erase weeks. You could have 4 green days where you're good, you're in the zone, you've done your research, you're at least making some profit each day, and then one bad day erases the whole entire week. So the rule that we enacted to stop this was something called the 2-strike day. So if the problem was the fat tail losses, we enacted the 2-strike day. Basically, what the data showed us on a lot of the days, specifically around 15 days, once the trade started going badly, things would just get worse. So 15 days finished at a $60 loss or worse. This is over the course of 3 months. And then 16 of the days had that loss, and then there was a chase where we revenge traded, and it ended red. So that's a loss and chase. This is what we call a fat tail loss. And a few really bad days erase many of the normal wins. So we had a rule that we enacted. So this is, and I want to iterate here again. This is something that works for Nick. Now it's personalized to his data, to his trades, to his daily journals, but that doesn't mean that you can't use it. So if you want to try this out for yourself, write it down, give it a shot, see if it helps you. But everybody's different. Everybody trades a little bit differently. Everybody's behavior is a little bit different. So this may not fit your situation, but this is what we saw from Nick. The rule that, of course, jump in.
Yeah, real quick. Shannon asked a good question in the chat, and we can talk more about it at the end here, just for the sake of time during our Q&A time. But she had asked, these are trades that were measured for me to your point, right? For me specifically as a day trader / scalper who's in and out of trades in minutes, right? Or under probably 20 or 30 minutes on average. But for other people, like her and others, they're more of day trader, or excuse me, they're more of swing traders, long slash like long term traders. So they hold positions sometimes for days, sometimes for weeks, sometimes even longer than that. So they'll need a way to analyze their past trades as well. And I believe there's a way to do that if you want to confirm that, and we can chat
Absolutely.
more about it at the end.
Cool. Yeah, no, and everybody, there's different types of trading. Like some people play the way long game, the 401k index, going in the S&P 500, and there's different modalities. What we're doing here is we're analyzing your historical performance and we're figuring out what you did wrong and then enacting a rule to stop that. So to minimize those net losses so that we can increase your profit over time.
And the other thing is, you may not know what you're doing wrong. That's one of the points here is like I don't know, like it was hard for me to really nail down what emotions was really kind of taking over for me because I felt a lot of emotions, right? And I wanted to hone in on what is this emotion called, what is this emotion that's causing me to have these these bad days, and reflecting on that, and then also with the system that I use, it's told me that hey, you're revenge trading because your red days become big red days. You take a loss in the morning. Well, you want to double your trade or increase your size and get that money back and then some. And then what happens? You lose that trade as well. And then all of a sudden I'm deep in the red hole. And then you have to say, okay, now I know what I'm feeling. I had the help through the system and framework that I use. Now I can enact rules, as Kyler said, in a plan to correct those mistakes that I've been making, to correct those emotions, to rein them in, and then get better over time, so I don't repeat those same mistakes again.
Exactly. So the rule we enacted for the fat tail losses was a stop for the day. So it was if he had lost a trade and lost $60 or had two losses. So whichever happened first, he would stop for the day. That's what we enacted for this. That was the first rule. The second myth that we found was having confidence equals size up. The ugly truth we found was oversizing nukes your edge and the gate prevents it. What we did here was we enacted a 2 contract default plus a gate. So if you're oversizing, it's going to kill your edge. So oversizing means you're using too many contracts. So when you go too big, small mistakes turn into big losses. So in Nick's data, he was using 5+ contracts most of the time. Out of 70 out of the 88 trades we analyzed, he was using 5 or more contracts, and that led to a 963 net loss. He was using, when he traded in the remaining 18 trades, he was using 3 or fewer and was almost even. He was only a net loss of $96. So it was the larger amount of contracts that is what was killing his results. So the rule that we enacted was default 2 contracts. Don't go above 3. You can go 3 or lower. And then for his pre-trade check, he would only take the trade if the risk was small enough. So if his contracts times the stop contract was less than $45, he could take it. If it was higher, he would skip. He wouldn't do it. So like an example of like a contract he wouldn't take would be if it's $20 per contract, 3 contracts would make that $60. That's too much. He could use 2 contracts for it, but you can't go above that $45 mark. And the biggest thing here was we talked about how you didn't want to, have that confidence. You don't want to cheat your rules, just to pass it. And the reason this matters is because your edge, like your ability to make money over many trades, weeks, comes from surviving the bad days. Like you're gonna have bad days regardless. This is something we saw over the past 3 months. There's gonna be days where you're like, oh shit, I just lost $2,000. I just lost $500 in one trade. And that's gonna happen. The biggest thing that the 5% that do well, they are able to survive and keep that loss to once a month, twice a month, and keep it minimal while they're minimizing all the rest of the losses following their rules. You don't want one trade to nuke your whole entire week. You got to minimize that. So the one takeaway that we took from this and analyzing his data was just size small by default and only take trades that keep your dollar risk under that $45 mark.
Yeah, so one of the issues here that this brought up for me, what the data showed was that I was oversizing obviously on my contracts. So what does that mean? For me, it meant that I had too many emotions because I was trading with too large of a size, right? I wasn't able to handle trading five contracts at a time. Obviously, it just my emotions crept in too much, and I just thought I'd be like, well, I want to make more money. I want to make money. But trading when you're starting out or when you're still trying to become profitable isn't about making money. It's about following your rules, following your plan, and executing correctly. Right? That's what it's about. Because when you do those things, ultimately you're going to see a profit. Ultimately, eventually, you're going to see a profit and you're going to make money. So by sizing down, I was able to remove a lot of those emotions and really follow my risk management, really follow my trading plan, stay more focused, not get the mini heart attacks when I'm in a trade and I see me start to go in the red, whatever it might be, right? So it allowed me to calm down, focus in, and really follow my plan. And when the time comes, when I master this level of three contracts, and I can start to see consistent profits, then for a while, then at that point, I can take that next step forward and go back up to four or five contracts my if the data supports that increase in contract size.
Absolutely. The next myth we found is take profit when you can. This connects back to the exit efficiency. Remember, early exits bleed you out. Your exits are the multiplier. And the one rule that we used to increase that exit efficiency that Nick had was a 1.5 R plus 90-second timer. And I'll be honest with you, this is my favorite one. If you guys want to take a rule and try it out yourselves, I would highly recommend this one. I thought this was the coolest when we found it. So the problem, winners are sold early. Like you did your research, you got in the market at the right time and you saw it, go up and you're like, hey, that's ding, ding, ding. That's profit right there. And then you sell because your heart's racing. You're like, oh my gosh, I did it. I was right. And then you watch as it continues to climb and you're like, man, why didn't I just wait? I could have 2x, 3x'd my profit, but I sold it because of those emotions that Nick talks about kicked back on. So in the actual data, what we saw was the median exit efficiency was 59%. You had 20 wins that were less than 60%. The rule that we actually enacted was at 1.5 R. So that's you put $40 in and you hit $60. You start a 90-second timer and you don't touch your computer. Obviously, you have your stop losses ready, if it's going to drop, but you take that 90 seconds and you let your heart just thump and you just watch it. And after that 90 seconds, you can either touch your computer or you can let it keep going. Basically, what your goal is you want to hold your winners a bit longer so your average win gets bigger. If you sit at that 1R, we've talked about this, you could just be crushed by the commissions and the big losses if you take any. You want to aim for 1.5 to 1.8 R per win and keep 70% of the profit that was available. So if you can get your exit efficiency to creep above that 70% mark, statistically, that's going to lead you to become a more profitable trader. But if you stick below that 50% mark, and everybody's going to be different, the only way we would be able to find yours is by analyzing your exit efficiency across your past trades. But you want to make that go up as much as you can. And you don't want, I mean, and I'm not telling you don't take profit at, 1.2 R. Like, if your strategy is telling you to do that and you just want that win, you can take it. The goal is to give yourself the confidence, train yourself not to insta sell. Because if you are just being led by that just instinct to sell immediately, it's not going to pay off over time. It may look good over 3 or 4 days, but eventually you're going to hit that big loss and it's going to crush your wins.
Yeah, good point, Kyler. And I've recently, so I've upped this to 2R, right? My R multiple is 2 at a trim. So if I'm trading multiple contracts like I am, I start trimming at 2, right? The reason why I do that is because, well, my stop loss is 1. If I do 1.5, is that really enough for me to make the kind of money that I want, especially with the type of trader I am, a support and resistance? Well, I want bigger wins for my trades. And normally, when for my strategy and the way that I trade, I should be wanting that higher R multiple trade. So I've upped it to 2 for my first trim target, and then I have 3 plus for my remaining runners, right? So that helps me become more profitable and holding longer, right? If I have that 90-second timer in at the 2R, and the problem that I had before was, well, you see you see me getting into profit. I saw myself getting into profit. The trade is going my way. I got a little excited. It's so close to my first profit target, and I see a little red, right? I see the candle bar just kind of it goes in a different direction just a little bit, and it's almost like, well, my God, I got to get out. I got to take my profits. It's going to turn around and come back down and hit my stop loss. That's where the 90-second timer comes in. That's what has helped with the system that Kyler built for me, is because having that pause in place allows the trade to just play out, right? I already have my stop in place. I have my profits that I can take, or they're already set. So I just need to sit back. I need to relax and breathe and let the trade work out. If it comes back down and hits my stop, that's okay, right? I was prepared to take that loss before I got into that trade, just like all of you. Every time that you get into a trade, before you get into that trade, you know what your stop loss is and you're comfortable. You've envisioned yourself losing on that trade. That makes your emotions a lot more tolerable, so you can do that, right? So just a kind of a couple of points there with that. As you're kind of understanding trades and taking your profit.
Now, what does this actually look like when you enact it? So, with no rules analyzing the 88 trades, there was a net loss of $766 with a max downward draw of $1,367. Now, if Nick had enacted all 3 of those rules for the past 88 trades on this same scale, this period would have gone to a net profit of $737, and his worst dip, that max drawdown, would shrink from a loss of $1,367 to a loss of $303. These rules would have completely flipped the scale on what he did. And like I said, these are rules that are very, very customized to Nick and can definitely help you if you want to try them out. But everybody's going to have different things that they have to work on. And it's all about analyzing what you've been doing, where you've been falling short, and then creating those systems in order to apply it to yourself. And I'm actually really excited for Nick because I want to see what he can do. I see the potential in him, and I'm really interested to see, as he continues to enact these rules time and time again, how this is going to look in another 3 months from now. So, what does this mean for you? You guys all showed up here. You're interested in learning more. The biggest thing here that I want to talk about is understanding your edge. We talk about these rules we enacted for Nick, but he's kind of said it throughout this whole entire presentation is your edge is your personal patterns. It's not a new indicator. What we actually are looking for, the information you find, your edge, you're going to find them in your logs, your journals. And what I just did with Nick is I found those. I found where he was exiting trades. I found where he was oversizing. I found that where he was, revenge trading after the morning rush. And we took that information, we codified them into actual rules that he could follow, and then we enforced them. We created checklists and we created prompts that he could live use while he was trading, before he was trading, after he was trading. So we basically here just analyzed it, put it into rules, and created a strategy for him. The back end, of course, yeah, dive in.
No. So just in a nutshell, what Kyler's created for me is an accountability trading coach, right? The trading coach has 5 different basically key areas that I utilize, 4 to 5. It doesn't have to be that many. But for me, it's 5 key areas. It's a daily coach. It's my morning check-in. I share how I'm feeling. I share my what the market is doing. I have the system analyze the market of what it's currently doing, what price action is currently doing in the ETFs that I trade, and it gives me feedback on that and the sentiment. It has my review after close, so I upload my trades after market close that I made for the day. It analyzes that and provides the right feedback for me on where mistakes that I made, things that I was strong in, and where I need to improve for the next day. Another data admin center where I import all of my trades to. Gives me risks and scenarios. So when I want to plan my day out and my pre-market agenda, my pre-market checklist, I upload my levels that I'm watching for the day, and gives me scenarios on a bullish day, on a bearish day, and on a range day. It's exactly the kind of information that I need, so I can then focus in on, okay, this is what I'm going to focus in on the scenario if the market goes in this direction or that direction. So it's giving me these guidelines. It's helping me hone in on the right area. Is it going to trade for me? Absolutely not. Is it going to call out a signal for me? Absolutely not. That's not going to happen. That never is going to happen. But it's going to be that accountability coach, as I mentioned, to be and provide the right educational coaching that I need in order for me to improve on a day-to-day basis, week-to-week basis to get better.
Exactly. 100%. So what we actually did on the back end was we imported his CSV from what he uses. He uses TradeZilla. I don't know. I'm not, when it comes to like different types of platforms, you can pretty much use what you want. But from looking at TradeZilla, I thought it was pretty awesome with the way the daily journals matched up with your actual trades. And it had a pretty easy way to just download all of the data on the back end. It was just a one-click export. We pulled it, we organized the data, and then we had ChatGPT analyze it. Now, privacy-wise, nothing is uploaded to a platform. Nick actually keeps all of his data on his own ChatGPT. And I know you guys maybe have used AI, maybe haven't used AI in the past 2 or so years. But if you do have an account, this will actually live inside of your account. So if you wanted it to ask questions, to teach you, to analyze new trades, you want to keep updating it and having it evolve with you, that absolutely can do that. The second step, we basically just analyzed all of the data. We found his 10 to 1030 edge. We found all the exit efficiency, the 59% median on winners. We found rule breaches on the last 20 trades, and we added those 3 rules to it. Third thing we did was just enforced it. We actually built checklists and created a coach. So what Nick was just explaining to you, you basically have your pre-market, you have your post-market, you have your rules, and you have your threads. where you can analyze those scenarios, the risk cap, the size gate, and then you can go and you can trade, take your data, put it into there, analyze the post market, figure out what you did wrong, how you were feeling, analyze your behavior, your psychology, and then set yourself up for success for that next day. We have his specific rules ingrained into the back end of it. And then the threads he was talking about is just what you would use inside of ChatGPT. Now, I recently just got new data from Nick and I was able to analyze it. I basically created just a little video of how this actually works if you were to update it. This is exactly what it's going to look like if you were to use it yourself and you were to update new data to it and what it would do.